Hi, this is Mary with QuickWin Bookkeeping. In this video, we're wrapping up our series, Let's Talk About Financial Reports, with an overview on accrual and cash-based reports. I'm going to explain the difference and what makes a business run on either. So let's start with the cash basis. So in general, revenue and expenses are recorded when funds are received or paid. A business that immediately gets paid by its customers for all sales is a cash basis business. Even if they use credit cards, it is still cash basis because the transaction includes the payment. In other words, revenue is recognized when the funds are received. There are no accounts receivable because the customer is not paying at a later time. So think about when you go to the store and buy groceries. You pay at the checkout and you get a receipt. That is called a sales receipt because you paid at the time of the purchase. That's cash basis. When a business pays a vendor immediately at the time of the transaction and receives a receipt, that is cash basis as well, even if you pay using a credit card. There are no accounts payable because the vendors are not paid at a later date. So also another example, say you go online to Amazon and you buy a book for your business. While checking out, you pay using your business credit card and you get a receipt. Then you enter it into your accounting system as an expense. That's cash basis. Now let's take a look at accrual basis. This is when revenue and expenses are recorded when they're earned or incurred, regardless of when funds are received or paid. This provides a more accurate view of the business's financial performance. Now understand that a business can file taxes on a cash basis, but still run business as an accrual. We'll talk more on that later. If a business sends out invoices to customers and allows them to pay at a later date, maybe on payment terms, then it is operating as an accrual basis. Accounts receivable is created when you send invoices because the customers will pay at a later date. If a business receives invoices from vendors, aka bills, they are paid on terms such as 10 days, 15 days, 30 days, and the like. This is what's creating accrual basis. Accounts payable is also being created when entering vendor invoices into your accounting system as a bill to be paid at a later time. I think it's important to note that credit cards should not be paid as a bill. Paying a credit card is not accounts payable, it is a liability. So why shouldn't you create a bill to pay a credit card? Because credit card accounts are financing accounts. They are used to pay expenses and bills to vendors for goods and services. Finally, let's go over the key differences between the reports. It's worth mentioning that while an accrual-based business can use either cash or accrual basis for tax and reporting purposes, the results of the numbers have different meanings and implications. On an accrual basis P&L report, the income is based on the invoices that have gone out during the set period. These may not have been paid yet, but they are counted as income. Just to note, sales that are paid immediately do still count in these reports. Likewise, the expenses are based on the bills that have been received during that set period. These bills may not have been paid yet, but they still count as expenses. Now again, expenses that are paid immediately are still included. On a cash basis P&L report, the income is only calculated for the amounts received during the period. Any open invoices are not calculated as income. Likewise, the expenses are only calculated for amounts paid during the period. Any open bills are not calculated as expenses. Let's move on to the balance sheet. On an accrual balance sheet, you will see the accounts receivable and accounts payable. Both of these represent balances on open invoices and bills, respectively, that have not yet been paid. In other words, what you are still owed. However, on a cash basis balance sheet, you will not see an AR or AP account because those are accrual basis accounts. A key here to note is that if you're running an accrual-based business, but your reports are all cash basis, you're not going to see your outstanding balances that are owed either to you or owed out of the business on a cash basis balance sheet report. And that's it. Now you know and understand the difference between accrual and cash basis reports. If you need clarity with your books and reports to help you grow your business, contact us today. We're here to help you. Thank you for watching. Be sure to like and subscribe for future videos.